Every week there are so many properties that hit the market on realestate.com, Domain and other sources out there. And it can be extremely overwhelming to figure out which one of these properties you should purchase as your next investment property. So in today's video, myself and Ben are going to break down exactly how to select the right property when you're ready to purchase an investment property. And hopefully from this video, you can avoid making any mistakes and set yourself up to get the best return on investment longer term. So we're into part 3 of the how-to series. We've now gone through how to select the right market, how to select the right suburb, and now we're in the suburb, we need to find the right property. So where do you start as a buyer's agent and an investor when looking for the right property?
You know, the very first thing that I started to look at when we stopped buying Sydney and started to buy Queensland was why certain streets, certain houses in certain suburbs that were maybe 50 grand difference 10 years ago and now 300 or 400 grand difference 10 years on. And we started to look at the suburbs. So I've got a super simple Google hack. All we do is basically print a map of the suburb. Let's call it St Kilda, Cronulla Beach, wherever else in Australia that you want to do it. And then what we do is we identify a price point. In fact, we identify 3. So cheaper properties are one color with a little dot on the map. More expensive are the medium, most expensive are different. For us, it's red, green, and blue. And what we do is we overlay maybe a year's worth of dots. So every time we see something in one of those categories, we put a dot. And what you start to see come out very, very quickly is that high concentrations or high quality properties sell in certain pockets, certain streets of a suburb. And therefore it's a really, really good starting point as to like which property is the right one to buy.
The best thing about this is, regardless of how well you know a suburb, you can map this out and you can become an expert in a suburb just by doing this. And what we also do on that is we'll look at where the main roads are, where the lights are, where the busy pockets of that particular suburb are, because ideally we want to be buying in those nice, quiet, family-friendly locations. And you know that when you drive around the suburb that you live in, you'll drive into a street and there might be wider streets, beautiful trees, all the properties are well maintained and looked after, versus you might drive down a main street, lots of units, maybe they don't look after the properties as well down that main street, and it just doesn't feel as nice. So you want to get into those areas that feel real good, right?
You know, the reason we created this as a business was because as we had new team members coming on, we wanted them to get up to speed really, really quickly on what represented value. And as we had new clients coming on, we wanted to educate them as much as possible on how to do this better in the future. So we got super militant. At one point we had the maps with the 3 different colors so that we knew the better pockets. And it was just, if it was in a cheaper pocket, we wouldn't look at it at all. But then we went to the next level, and in red on the same suburb map, we crossed out all of the main roads, all of the cemeteries, all of the things backing onto schools, all of the wide roads, the train routes, the bus routes, the industrial, the commercial, the retail, the shopping centres. And then all of a sudden, it became as simple for us when we looked on realestate.com. We'd have the map of Cronulla Beach open in front of us with the property in Cronulla. And before we even looked at the house, we would look at the map and immediately either rule it in as something that we should look at or something we should rule out. Now, when you get to that level of detail, you realize that only 5% of properties in a suburb you would actually buy, which makes buying so much easier.
100%, because what we say, property investing is more about what not to buy than what to buy. So by ruling out all of these average properties, we could call them, it's putting you into a position where you're going to secure that property. Now, we don't necessarily have the data to quantify that. It's just based on experience, seeing certain properties rise in value at a much more rapid pace than other properties in the exact same suburb. You know, then we really dive into the street level, because once we've ruled out certain areas that we won't buy in, we're still looking to try and get into the high quality streets within that suburb. Now, we take it to another level where we actually look at who owns the properties on any particular street that we're thinking of buying on. Fortunately for us, we have access to CoreLogic RP data where we can look at exactly who owns, and it will indicate whether or not it's owned by the government, which indicates it's public housing. And for us, as a rule of thumb, we try to avoid streets that have more than 10% housing commission on any street. And what you can also look at up here in Brisbane is the flood zones as well. And it will help you see exactly where those floodlying areas are. And obviously we avoid them like the plague. You do not want to be buying in areas in Brisbane that are affected by flooding. And you can always check that before you're even going to purchase the property as well, which is awesome.
Completely. Like as you said before, when we get to the street level, we're looking for nice wide streets with a higher percentage of owner occupiers, no housing commission, no landslide overlays, no flooding, no major bushfire issues. Like there's a whole art and science, I suppose, to what look for. But in reality, it's as simple as, would I buy this home if I was in this income bracket in that suburb and raise my family in that particular street, which means no bus routes, no main roads, those simple things that can just increase your chances of better performance. But once we've got the street nailed, then what do we look for in terms of the block or the ideal site?
Yeah, so, for us, it's just a criteria. We look at a minimum 500 square metre piece of land or larger. There is certain concessions that we will make with the block size. Sometimes when you're in a really premium beachside location or city location, we're happy to make some concessions there. Or if the investment strategy actually warrants the fact to go for maybe a lower maintenance, newer property that might be on a slightly smaller block. But the idea here isn't anything new. The bigger the better, right?
I've heard this.
Unfortunate for my missus, it's not the case. But we want a nice big piece of land, 500 at least. But if you can get 600, great. If you can get bigger, amazing. Then what you're looking at with that block as well, you want to kind of look at the shape of the block, and we typically try to avoid really irregular shaped blocks. We want a nice big frontage, you want some side access, but once again, this isn't necessarily a rule of thumb, because I think the best areas to invest in are cul-de-sacs. And sometimes when you get into these cul-de-sacs, because you can't necessarily have a rectangular block in these areas, you might get a rhombus or a triangle of some sort, which is amazing because you're in a nice, quiet, family-friendly street. So these things aren't necessarily a must-have. It's just trying to get the best possible piece of land that you can.
100%, man. Like on top of that, I personally like blocks with a nice big frontage because it does create like street appeal. I also like my properties personally, although not all of mine face this way, to be like north in an ideal world, east or west. I've lived on south-facing blocks, and sometimes it can just get a little bit cold, even up here in Queensland during the winter months, and the kids don't use them as much. But that's not a deal breaker. Again, if you're nailing the city, you're nailing the park, the pocket, you're nailing the suburbs, you're nailing the street, and then you're getting a good block and a good quality home. Like you're ticking 99% of the boxes. Like you're not, for most price points in Australia, going to find the perfect property in every street, in every suburb in Oz.
And the reality is we're going to have to renovate these properties because we're long-term investors, and I think everybody should be a long-term investor as well. And if you're holding a property for 15, 20 years, you're going to have to come back and maintain it at some point. So the house level is the least important factor of this three-part series. The most important part is identifying the right market at the right time, identifying the right suburbs within those markets, the right pocket within those suburbs, the right street within that pocket, the right block on that piece of on that street there. And then you're obviously looking at the house level, which is really going to be determined by your personal strategy. For me, I like to buy really rundown houses that I'll come back and knock down and rebuild in the future. But we work with a lot of interstate investors that don't want to be that active and just want to buy a nice, modern, low maintenance, tenant ready home. So the house level will really depend on your strategy, your budget, and what type of, if you want to manufacture value on that particular opportunity.
Some of the things at the house level that I look at personally in a dream property is a nice big living, dining, kitchen onto al fresco type area, like that indoor, outdoor living. I like a nice large master bedroom with an ensuite if possible. In an ideal world, you'd get sort of a 3-bedroom, 1 or 2 bathroom, or 4-bedroom, 1 or 2 bathroom home. Car accommodation on the house level is really important to some people with nice cars. Not so much myself. I just sort of let it roll. But
what have you got? You got 1, 2, 3, 4, 5 undercover car parking spaces
and the
here, and
cars
all the cars are outside.
I don't value that because I'm like, I get my car washed, or me and my little son wash it anyways. But I know that can be really important to some people. I have kids, 3 of them, so backyard's really important to me. I do like properties with a usable backyard or usable self-contained front yard. That can be really, really important to some people too. If bedrooms, in an ideal world, like if Simon and I were building something from scratch, you'd have a nice big kitchen.
Yep.
You'd definitely have lots of storage in the house as well, robes in the bedrooms. You'd have fans, you'd have air cons throughout the property too. And the bedroom sizes in an ideal world would be sort of 3 meters by 3 meters minimum, if not bigger than that. With a lot of people working from home now, sometimes like a split upstairs, downstairs, or a split study in a house can be really important too. But, what I look for mostly, if I'm taking all of that off the table, is just a good size home, a minimum of 80 square meters, but same thing as the land size, sometimes bigger is better, particularly as people have realized the dream might not be, commuting to the office every day, and now we want to be at home and we want that to be comfortable and we want that big backyard again. So they're just a few tips that can help out. It's much easier when we're building from scratch to design that, but most of my properties don't tick 90% of those boxes. They've still increased in value by 50% in the last 10 years.
Still rent extremely well also. And I think something to talk about is pools as well. Pools have been sort of frowned upon for a lot of investors. If I were investing down in Sydney or Melbourne, I'd probably be pretty cautious about putting a pool in the backyard. But up here in southeast Queensland, you do have a much more warmer climate, and they tend to rent extremely well when you do have those pools in specific locations as well. So once again, it just comes back to the strategy, and it's, there's not a one size fits all here. You really need to understand your goals, what it is that you're hoping to achieve from that property in terms of capital growth and cash flow, the type of demographics you want to be renting that property out to, and also your affordability. Not all of us can go out there and buy a really nice, modern, beautiful home in a great suburb. We have to start with what we can, and for first timers, it's better to get your foot in the door, get into a good market, get into a decent suburb, get into a decent house, and then over time you can change. My first property was a $380,000 shitbox in North Brisbane, and that was all I could. Obviously, I would have loved to buy a little bit closer to the city, but unfortunately my budget didn't enable me. So it's really important to kind of just have an understanding of what you can financially do at any given time, what you're really hoping to get out of that property, and then just slowly but surely moving through the process. And, if you follow this criteria, you'll end up with an amazing investment property in your portfolio.
I think that's super, super important, bro, what you just addressed, because what we're trying to do through our education on this channel and what we absolutely follow like religiously with our clients is best practice, not best Australian practice, but best world's practice. And so we've got literally hundreds of things that we look at for paying clients that we make sure they hit. Most of them, they don't even know about them because we want to absolutely nail that extra 1, maybe 2% per year, because we know over time that can result in hundreds of thousands of dollars better off positions for clients. But for me personally, like my second property cost me $213K. It was in a suburb. Well, it was in the right city, which was Sydney at the right time, effectively. Like that's one thing that I did nail in terms of this 3-part series. I nailed the timing of it. But outside of that, it was in a suburb with 80% renters, 50% of those were housing commission. The average household income was $400 a week at that time. I bought a property that was okay in an okay street, but it didn't really tick many of the criteria we've just talked about. Now, 11 years on, I sold that property a long time ago, but it'll be worth over 600 to 650K now, which means it's effectively tripled in value since I bought it. Now, for those of you that aren't going to work with us and that aren't, writing all of these things down and like looking to get best practice, the reality is if you buy Sydney, Melbourne, Brisbane, Perth in a good, quiet street with an okay home on it and hold it for 20, 30 years, you're going to be so set up anyway. So take that pressure off yourself. Like we don't want you to feel like you've got to do all these things all the time, because half of my properties, like I haven't followed every one of these things because I don't have a $3 million budget.
And it's your strategy is different.
My strategy is different. And,
Yeah.
you know, for me, my strategy looks different to yours, looks different to like 10 of our clients that are on the board at the moment.
Exactly.
And we're just trying to make the best decisions we can at the time. But with these little ideas, if you follow half of them, you might end up 1% better off per year, and that will change everything in your future.
100%. And if you're somebody that's out there that's thinking about purchasing an investment property and wants some support in identifying the right market, the right suburbs, the right properties, and just wants to build your understanding and education, you know, we do run a buyer's agency where we help a small number of people invest in the Brisbane property market every month, but we offer everyone a free strategy session, and you can find that over on our website, www.pumpedonproperty.com. If you follow the free strategy session links, you'll be able to lock in a call with either myself, Simon, or Ben. And during that strategy session, we'll talk about exactly where you're at right now, exactly where you're wanting to be in the future. We can bounce some ideas off each other, and I can educate you a little bit further on the market, and then you can go and take that information and absolutely crush it yourself, or you can become one of the few clients that we work with each month, and we can hold your hand through that process and ensure that you get an amazing investment property. But either ways, we wish you all the best of luck, and thank you so much for tuning in to today's video.
Whew,
That's a wrap.
that's a wrap.
Getting
Have a
cool,
spin.
bro. Yeah. Oh, sweaty. So sweaty. Oh, that's good. Look at that.
Very nice, eh?
Oh.